Hello guys, so today I'll be teaching the lecture number 2 for FR, and I'll be teaching investment property and borrowing cost today. So I'll be starting with borrowing cost. So let's understand what is borrowing cost. Okay. Borrowing cost. Borrowing cost, it is a cost which a company has to pay on its borrowing. It is also known as interest cost. And the standard for borrowing cost is IAS 23. Okay. Now coming the main part. What we have to know in this chapter. We have to know that what interest slash borrowing cost we need to capitalize in the value of asset. Remember in the in the last class we did initial measurement, right? In initial measurement there was a point, this point, borrowing cost. So we have to cover this point in this whole standard, right? So we have to know that what is the amount that we need to capitalize to the cost of asset, right? This is the question that this standard will answer. Now let's open borrowing cost. Yeah. So borrowing cost, it is interest or other cost incurred in connection with borrowing funds. Okay. So it includes interest expenses, finance charges, and exchange differences. Exchange differences is not important for the point of view of FR. It is important for SBR. Okay. So this is the thing that we have to remember. Now, there's one more thing which is very important. So borrowing costs are to be capitalized only for qualifying asset. We can only capitalize the cost which is incurred for a qualifying asset. Now, what is a qualifying asset? So qualifying asset is an asset that takes substantial period of time. This substantial period of time word is very important, and we have to remember that intended use or sale is also important. An asset that takes a substantial period of time to get ready for intended use or sale. So this is the definition of qualifying asset, and you should remember this. Now, what is an example? So example for qualifying asset is building under construction, large manufacturing plants, inventories requiring long period of production, investment property under construction. So all the assets which take long time to be developed, it is known as qualifying asset. Intangible asset requiring long development is also a qualifying asset. Okay. What is and not qualifying asset? Not qualifying asset is inventory produced quickly, financial asset, ready for use asset. These are the assets which does not qualify for the capitalization of borrowing cost. Okay. Now, what is the capitalization principle? This is very important. Okay. Capitalization principle of borrowing cost. Yeah. So capitalization can only be done for construction, acquisition, and production of qualifying asset. Okay. This is the capitalization principle. Acquisition, construction, or production of qualifying asset is the principle. All other borrowing cost will be expensed to P&L. Okay. If the borrowing cost is incurred for other than these three conditions, it will be expensed to P&L. This is the thing that we have to remember. Now moving forward, when to start capitalizing. This is an important point. When to start capitalizing. Capitalization begins when all three conditions are met. All three conditions are met. Expenditure on the asset is being incurred. Okay. Borrowing costs are being incurred, right? Activities to prepare the asset for use/sale are in progress. These three things are important. So let me explain you with the help of a timeline. Okay. So let's assume that this is a timeline. Okay. Now here we, borrowed funds from bank. Borrowed funds from bank. Okay. Which means if we, let's say this date is 1st January 20x6. Okay. Let's say we if we have borrowed funds on this date, that means that we will be paying interest. We will be paying interest from this date, right? So from this date, the interest expense will start. Now assuming that this is 31st March 20x6. Okay. Assuming that on this date we have started preparing the site for construction, right? Which means we have started incurring expenses from this borrowing. Okay. Incurring expenses from this borrowing. So the question is, on which date will we start capitalizing the borrowing cost? Will we start capitalizing on 1st January 20x6 or will we start capitalizing after this date? So the IAS 23 borrowing cost principle says that we will start capitalizing on this date, on 31st March 2026, and onwards from this date we will start capitalizing. Now the year end is 31st December 20x6, right? The question is, and the asset has not been constructed yet. Asset is still in construction. Okay. Now, what will be the period where we will be capitalizing the borrowing cost? So the period of capitalization would be period of capitalization would be from 31st March 20x6 to 31st December 20x6, and the period for cost in P&L, it will be 1st January 20x6 to 31st March 20x6. So this will be the period for capitalization, which is the period between this line, right? This line will be the period for capitalization. And the period for P&L would be this line, this line. This will be the period for P&L. Okay. So you have to remember this. Okay. I hope I am clear on this. When to start capitalization? We will start capitalization on 31st March 20x6, and we will capitalize till the period the asset is constructed. Now what happens? Let me take example of this thing. Okay. One more example. 1st January 20x6. We have started the preparation of site and started incurring expenses on now on 31st March 20x6. We have borrowed funds from bank. 31st December 20x6 is an year end. Now tell me what will be the period for capitalization. The period for capitalization will still be this part. Okay. The period for capitalization will still be this part. Okay. And the period for P&L will be this. Okay. Why? The reason is because in this we can see that we have borrowed funds on 31st March 20x6, which means we have started the payment. We have started the interest payment on this date. We have started incurring borrowing cost on this date. So this is why we will be starting the period of capitalization here. Okay. Now moving on to the next topic. When to stop capitalization? Capitalization will stop when substantially all activities necessary to prepare the assets are complete. Partial completion, stop capitalizing only for that part. For example, complete floors of a building that are usable. For example, I have been constructing this building. Okay. And this building has, let's assume, 3 floors. Now I have completed this floor. Okay, this is ready. So I'll be stop capitalizing interest for this part, right? And I'll be still capitalizing the interest for these three floors, right? So this is the meaning of the second point. Okay. And when the construction for all these floors will be completed, right? When the construction for all these floors will be completed, we will stop capitalizing the borrowing cost. Okay. When to suspend capitalization? This is an important point. Okay. When to suspend capitalization, which means when to stop or pause the period of capitalization. For example, this is a timeline. Okay. And I was capitalizing interest from this date, 1st January 2086. I was capitalizing. And suddenly in between, what happened was there was a pause for 2 months. Okay. There was a pause for 2 months. And this pause was unavoidable. Will I stop capitalization? No, I will not stop capitalization. Not stop capitalization. Which means I'll be capitalizing the interest for these 2 months as well in the asset value of asset, because because the pause was unavoidable, right? If if this pause was avoidable, what would have happened? If avoidable, suspend capitalization. Okay, this is the point that we have to remember, that suspend during the extended period of inactivity, right? Do not suspend if delay is normal for asset, or technical or administrative delays are unavoidable. So these are the conditions that we have to remember, that either the delay is unavoidable or either it is normal for an asset. Okay, it is normal for an asset. These are the things that we have to remember. Now comes the important part. Okay, now taking an example. This is an important part. Calculation of borrowing cost. So we have to remember that there are two types of borrowings. Okay, there are two types of borrowings. The first type is general borrowing, and the second part is specific borrowings. Okay. Now, what is the treatment difference between the two? In general borrowings, what happens? When we are doing calculating borrowing cost for general borrowings, what we will see? There are, let's see, three borrowings which a company have. This is 10,000, this is 5,000, and this is 15,000. And the interest for these three is 5%, this is 15%, and this is 10%. Okay. Now the question is, how much will we take? We will take 5%, or we will take 15%, or we will take 10%. We will not take either of them. We will see a formula. We will calculate a weighted average interest rate. How we will calculate this? What we will do, we will calculate the interest for all of them. What will be the interest for all of them? For a year, the interest for 10,000 multiplied by 5%, it would be 500. 5,000 multiplied by 15%, it would be 750. And 15,000 into 10% will be 1500. Okay. Yeah. So now what we will do, we will write here 500. We will write here 750. We will write here 1500. We will add all of them and we will take the total value of the borrowings. Okay. In the denominator. What is the total value? Total value is 30,000. Okay. We will take the total value of the borrowings. Now what is the total amount of interest? The total amount of interest is 1500 plus 750 plus 500, which is 2750. 2750 divided by 30,000. What will be the interest rate? We will get the answer as, the answer that we will get will be 0.0916. Okay. Or we can say it is 9.16%. Now let's say that in the question that they have given us, we use $20,000 for the purpose of construction of a qualifying asset on 1st January 20x6. Okay. Asset is still under construction as at 31st December 20x6. Calculate borrowing cost. Now, what will be the borrowing cost? We will simply do 20,000 we'll simply do 20,000 into 9.16 percentage. The answer will be 1832, right? So the amount to be capitalized will be 1832 rupees. Okay. I hope this is clear. Moving on to the next part, which is specific borrowings. Specific borrowings, what we will be doing, this is a type of borrowing which we took specifically for the qualifying asset. For example, for Example, $20,000 at the rate 8% interest. Now, let's see what is the formula for the amount that we will capitalize. Amount to be capitalized will be equal to total interest expense minus total investment income from investment of unused borrowings. Let's take an example for this. Okay, let's take an question example for this. Question is that what will be the total capitalized borrowing cost if we used $10,000 for the initial 6 months and the rest 10,000 was invested during this period at the rate 6%. The invested amount was withdrawn and used for the production of qualifying asset. Okay, this is the question. Let's calculate the answer. So, answer total capitalized borrowing cost will be, firstly we took a borrowing of 20,000 and the interest rate was 8%. So we will pay, this will be the total interest cost, right? This will be the total interest cost. Then we will be subtracting the investment income from this. So the investment income was $10,000 were invested, right? And were invested at the rate of 6% and were invested for 6 months. So 6 by 12. This will be the total investment income. Let's calculate this further. 20,000 into 8% is equals to 20,000 into 8% is equals to 1,600, right? And the investment income, which is 10,000 into 6% into 6 by 12 is equals to 300, and after subtracting this we will get 1300. 1300 is the total value of capitalization of borrowing cost under specific borrowing. Okay, and I hope this much is clear. This chapter is over, borrowing cost, right? And let's move on to the next chapter, which is investment property. So investment property, IAS 40. Okay, so investment property, IAS 40. What is investment property? Investment property. First, it is a non-current asset. Second, it is tangible in nature, right? Just like property, plant, and equipment, it is a non-current asset and it is tangible in nature. Now, next, it is held for capital appreciation or rental to others. What is the difference between property, plant, and equipment and investment property? This is property, plant, and equipment, and this is investment property. Investment property. What is the major difference between the two? The major difference is in investment property there is only land or building or both or a part thereof. So there can be only land and building in investment property. Any asset including land and building. So the question arises that if both of them includes land and building, so how to check whether the land and building is investment property or it is property, plant, and equipment? So a land and building, if it is held for capital appreciation, it will be investment property, and it is held for rental to others. Okay, rental to others. If a land and building is given on rental to others, it will be investment property, not property, plant, and equipment. Okay, so we can write rental to others only land or building. Okay, and in property, plant, and equipment, it is held for production slash supply of goods and services, right? Or it is held for administrative purposes. What are administrative purposes? Administrative purposes can be head office, right? Head office is an administrative purpose because it is used as an office, or it is used for rental to others. Now, here thing to remember is, if we are giving rental to others in property, plant and equipment, it should not be land and building, which means if a land and building is given on rentals, then it will come under investment property, not property, plant and equipment. Okay, land and building only will come in the investment property. And in property, plant and equipment, we have to remember that if there is a rental to others, it should not include land or building, right? So this is the major difference between the two. Okay, now moving on, the definition we have covered. Now moving on, the recognition criteria. Recognition criteria. It is same as PPE. What is the recognition criteria for PPE? It is future economic benefit is probable to flow in the entity, or cost can be measured reliably. So this is the condition for recognition criteria for investment property and property, plant and equipment. Now, moving forward to measurement. Measurement principle. Measurement principle is, there are two types of measurement, right? One is initial measurement and one is subsequent measurement. Initial measurement, and this is subsequent measurement. So initial measurement, it is the purchase price, the borrowing cost, non-refundable taxes, directly attributable costs, and provision for restoration slash dismantling. So this is also same as PPE. Same. This is all. And in the subsequent measurement, there are two models, right? In subsequent measurement, there are two models. We have to remember that there are two models in subsequent measurement. One is cost model and the other is revaluation model. Okay. So remember that these things which are in block are same as property, plant and equipment. If you want to know what in detail, you can go to the property, plant and equipment lecture. Now let's discuss the revaluation model of investment property. The revaluation model of investment property. So in the revaluation model of there will be either a profit or a loss, right? In investment property when we revaluate, right? There can be a gain or there can be a loss. So in property, plant and equipment, the treatment is very easy. Both will go to P&L. Okay. Nothing will go to OCI. So the revaluation model of investment property is far easier than the revaluation model of property, plant and equipment. Because in revaluation model, there is no OCI which comes in place, right? That is why it is easy. Now comes the treatment. Okay. So the revaluation gain will go to PNL and the loss will also go to PNL. So now let us check what is the difference between the revaluation model of PPE and investment property. Okay. So that you are clear about things better. So in property, plant and equipment, gain goes to OCI and loss goes to P&L. Whereas on the other side, gain or loss both goes to P&L. Okay. Second, depreciation continues. Depreciation stops. Revaluation is done generally in 2 or 3 years. But in investment property, evaluation is done annually. So this is the major difference between the property, plant and equipment and investment property revaluation. Okay. I think this is clear. Now moving on to the disposal part. Okay. The disposal of investment property. So we will be de-recognizing investment property when it is sold or it is permanently withdrawn with no future benefits. Okay. It is permanently withdrawn with no future benefits. The gain or loss will be recognized under P&L. Okay. And there is a one more concept known as fair value measurement. Okay. So what are the key points of fair value measurement? Fair value must reflect the market condition, highest and best use, and independent valuation. Recommended but not required. Okay. This is recommended but not required. So we have to see that the fair value should be under market conditions, and it should be the highest and the best use of an asset, and it should be done if it is an independent valuation, then it is better, but it is not required. Okay. So what are the things that are not considered as investment property? Owner occupied property is not a investment property, it is a property, plant and equipment. Property held for sale is not an investment property, either it is inventory or it is IFRS 5, depending upon the nature. Property being constructed for future use, which is IAS 16 or IAS 2, depending on purpose. Okay, IAS 16 is again PPE, and IAS 2 is inventory. Okay, so if a business does a business of real estate, right? So the property that he is constructing will be considered as inventory because he has to sell that, right? If it is a uh, normal building used under business for head office or for factory, that will be under the property, plant and equipment. That will be considered as property, plant and equipment. Okay. So the practical example for investment property is land held for appreciation. Obviously, people buy land because the value of land increases frequently, right? So that is why people buy land for increasing their wealth. Building rented out, building rented out to tenants, right? This is also a investment property because it is a building and it is rented out to a tenant. Vacant property held for long-term value increase. Okay. This is also known as investment property. Office use for business is also not investment property. Property developed for sale is inventory, not investment property. Property leased to a subsidiary is also uh, treated as owner occupied in consolidated financial statement, right? So that is it for the investment property as well, because investment property majorly things are same as property, plant and equipment, right? And we have spent a lot of time in property, plant and equipment, so there is only a difference in revaluation model of investment property, which I already told, that there is no purpose of OCI in this, right? There's no purpose of OCI. So we will be seeing PNL only while measuring the gain and loss. Okay, and we have also studied the difference between the two. So that is it for today's lecture. And guys, I hope you liked lecture number 2 of borrowing cost and investment property. And in the next lecture, we'll be covering intangible assets and impairment of assets. And most probably, I'll be uploading the lectures in the on Monday or Tuesday. So this is all for today's lecture. I will be attaching my LinkedIn link and Instagram link in the description box. So do check out them. I regularly post valuable content on both of the platforms. So that's it. Thank you for watching. Please like and subscribe the channel.